Welcome to a weekly recap live. I'm your host, Joseph Martin, and thank God it's a little bit different this time. It's Sunday, guys. It's Sunday. So this is the first time we're going to do like a Q&A scheduled live stream on Sunday for this week. So we don't have like a structure. I don't have a structure set up for it quite yet. So bear with me. I had a heck of a weekend, much love and quality time with my family that came in town, and we've had a ball. So as you can see, I need to shave. I got my dress shirt home from earlier when we went to the museum and had a great day. But I know that you're here for the stock market, but I'm telling you a little bit about me and my life and what's going on right now, because we really don't get an opportunity to do that throughout the week. So I'm going to take this as an opportunity while I have you guys here tuning in or watching this back. And I hope I made sure that I had the chat replay active. Oh, man, I hope so. I believe I did. I believe I did a good job with making sure I did that. So, yeah, this is new. And with us doing this on the weekend, we're going to see how this goes, because I can already hear my family in the background starting to stomp around and jump around and make a noise. And that's part of the reason why we have the live streams at 11 p.m. at night throughout the week. So this is something new that I'm adding into our schedule. So if you guys not able to ask questions or get your questions answered, let me word it that way. If you guys ask a question that deserves a little bit more time or takes a little bit more time than to answer during that regular format that we have Monday through Friday, then this gives you guys an opportunity on Sunday at 9 p.m. Eastern time to tune in and ask those questions. It's going to be a little bit more laid back, a little bit less structured as far as having a full laid out format. We're going to have a little bit of time to move things around. So that's what we're going to do on Sundays. But I do want to make sure that we look at how the sectors performed in the S&P 500. You can even tell my energy ain't the same. Like, I'm tired, guys. Like, I had a lot going on this weekend. It was good, but I had a lot going on. Like, I'm not even, I don't have the energy to do that right now. I really don't. So let me pull up the S&P 500 watch list. And then we're also going to look at that on the visualize tab. I'm going to highlight an actual company that stood out to me last week. And we're going to talk about that. We actually talked about this company twice this week. We covered them on Thursday, and I think we covered them on Friday during the live stream, which was cool. But the chat is open. So if you have any questions about anything, you want to say where you're tuning in from, matter of fact, I'll put that ticker on the screen. Let's do that. No, that's the wrong one. I'm asking you for some money. That's the one. You tuning in from YouTube or Facebook, go ahead and put that in the chat. That'll get that going while I take care of this. All right, so go over here to the charts. I got that rotation tool pulled up. Market watch, visualize, S&P 500. Okay. I believe we're good. So let me make sure I cut this phone off or at least put it on silent. And I'm going to go ahead and get this show rolling, guys. I'll leave the phone alone. Somebody might need something. I'll leave it alone. All right. So what can we do? We're going to go over to the charts, and I'm going to show you the rotation tracker tool that I designed so we can look at how the sectors perform. So just in case you don't know, let me pull this up. Let's go ahead and get started. ThinkorSwim platform. We're not talking about Dell right now, so let me take them off the screen. Bam. And what I will do, I'll put the Q&A thing up on the screen. Let me do that. Thank you for tuning in. Hit that like button. I definitely would appreciate it. And consider subscribing to the channel. There we go. Q&A, ask questions in the chat. So we are good. We got that set up. All right, so there are 11 sectors, okay? There are 11 sectors in the stock market. And those sectors are energy, materials, industrials, consumer discretionary, consumer staples, healthcare, financials, information technology, communication services, utilities, real estate. Yeah. So this TTD you're seeing there, ignore that. Let me change that to SPX. There we go. All right, we can even take that off, but I'll leave it alone. So what this tool does, this tells me how each sector performed, and this is tracking the S&P 500 companies that's listed, okay? And I want to make sure that I'm explaining this correctly. So the S&P 500 has the top 500 companies listed in the United States. So that's this right here. So if we go to S&P 500, here are those 11 sectors right here. Communication services, consumer discretionary, consumer staples, energy, blah, blah, blah. All right, you get the idea. So what the tool is doing when we go over back to the charts is tracking how all of those companies in each sector listed inside the S&P 500 performed for the time frame that we're looking at, okay? Now, I want to make sure, because I'm drawing a blank. I don't remember if this was one of the first full weeks we had, because I remember. What day was the holiday, guys? Was that the 18th or the 25th? I don't even remember. Oh, I know how to find that out. What we're going to do, we're going to just go ahead and go to here. We're going to go to apps. Then we're going to go to the New York Stock Exchange calendar. That's what I'm pulling up. So I'm gonna pull this up over here. Now, I usually have a link to this website down in the description so you guys can track what days the market is going to be open, when it's going to be closed, and what the hours are going to be. So here's the 2026 schedule for when the market is going to be closed. So they tell you the trading days, the trading hours, and things like that. So I remember it was Memorial Day. So that was May 25th, okay? So May 25th would have been Monday of this week that just passed, right? Right? All right. So let me show you this. So that means that when we look at this tool that I was showing you, this says 5 days. This FD, this is tracking 5 days. So if we're tracking 5 days, which were the previous 5 trading days, this would include Friday of that previous week because the market was closed on Monday. So I have this set up where I can fix this. So what I'm going to do, I'm going to go into my edit studies, go to settings, and then I can switch the time frame for the days. So I'm gonna put it on 4 days. So now this is from Tuesday to Friday. That's what I just did. All right. So now it's saying 4 days. So now this is going to be more accurate. This is just going to tell me how those sectors perform for the 4 days the market was open last week, Tuesday through Friday. Okay. So energy lost 5.4% last week. Materials went up 1.7%. Industrials went up 8%. Discretionary, consumer discretionary went up 1.4%. Consumer staples went down 2.2%. Healthcare went down 0.3%. Financials went down 0.7%. Technology, information technology went up 5.9%. Communication services went up 0.2%. Utilities went down 2.1%. And real estate went down 1.3%. And SPX is the S&P 500 index. So as a whole, it went up 1.4% last week, just counting Tuesday through Friday. Okay. Now I'm going to switch over to, and you can read it right here, 1 month. So with 1 month worth of data, it's going to be like an estimate. It's going to be close to 1 month. It's not going to be as specific as how we went in there last time and changed that one day to make it accurate. It's like an estimate, okay? So in the last month, energy went down 4.6%, materials went up 0.4%, industrials went up 1.9%, consumer discretionary went up 3.5%, consumer staples, it's rounded off, guys. That's why I'm saying it's 0. Let's just say it didn't move. Let's just leave it at that. Healthcare, it went up 4.6%. Financials went down 0.7%. Technology went up 20.1% in the last month. So that definitely stands out. Communication services went up 4.4%. Utilities went down 2.8%. And real estate went up 0.8%. And as a whole, the S&P 500 index went up 6.2%. So that's what we're looking at. Now, when we go here, we can see that this says 3 months. So you get the idea. I don't want to, let's just go ahead. Let's just read it. Y'all ain't asking no questions anyway. Let's just read it. So now when we look at the performance of these sectors over the last 3 months, energy went up 0.7%. Materials went down 4.2%. Industrials went down 2.3%. Consumer discretionary went up 3.4%. Consumer staples went down 7.9%. Healthcare went down 6.7%. Financials went up 0.3%. Information technology went up 37.7% in the last 3 months. Communication services went down 2%. Utilities went down 6.9%. And real estate went up 0.3%. The S&P 500 as a whole went up 10.2% in the last 3 months. So the last time frame that I have in my tool that I programmed or created is 6 months. Now I could change these time frames, but this is what I look at: the 5 days, 1 month, 3 months, and 6 months. And then I'll explain why I'm doing it that way. So 6 months, energy went up 27.1% in the last 6 months. Materials, they went up 16.5% in the last 6 months. I don't have to keep saying 6 months. All of these are 6 months. So I'm just going to keep reading from left to right. So the industrials went up 14%. Consumer discretionary went up 3.6. Consumer staples went up 6.2. Healthcare went down 5.9. Financials went down 1.8. Information technology went up 36.2%. Communication services went up 1.2. I don't remember if I said up or down, so let me make sure I say this correctly. Information technology went up 36.2%. Communication services went up 1.2%. Utilities, they were flat. And real estate went up 6.5%. And the S&P 500 as a whole went up 12%. So I designed this tool for me to be able to get an idea of where the money is flowing, like what sector is the money flowing into. And I have different time frames so I can look at when it's moving, so I can try to get an early indicator on when that money is moving to another sector. That's what I'm looking at. So I want to see how each one of these sectors are performing throughout the weeks. So it's more sensitive in my experience to look at it on the weekend, because now we have a whole week that went past where I'm going to be able to have data that tells me how the money moved this week, what sector went down that week, how is it performing over the last 6 months, 3 months, or a month. That's what I'm looking at when I'm using this tool. Okay, so I'm going to share this data on Sundays, and then we're going to do the Q&As for whenever someone asks questions or want to get their questions answered or anything that we didn't cover throughout the week. Okay, so that's what we're going to do there. Now let me go back here and let's go to what I have in this prompter. Let me just read what I got, because I don't even remember everything I put in here. Since this is something new, we're going to be doing it's going to be a little bit more laid back from our usual live streams with the Monday through Friday, which is what I told you earlier. Sunday is going to be about community. Okay, this is where we're going to talk and ask questions that we don't have time to get to during the week, which I talked about. So I have a few topics that I want to cover, and I want to tell you guys share with you guys some of the books that I've been reading. Okay, so this is what I'm working on for personal development. I'm reading John C. Maxwell's Failing Forward. So this is a good book to read. I'm in the process of reading it, so I really can't tell you much about it. Look it up. Go on Goodreads. Go on Goodreads and check it out, or go online and ask the little questions about what is this book about? Can you tell me what this book is about and things like that? If I had to tell you off the top of my head from what I'm getting from it so far, it's talking about how failure is part of the process. Like failure being a permanent place is when you stop. When you stop as an individual. If you keep going, failure doesn't really exist. You kept going. Failure is when you stop. When you make a mistake or when something doesn't work, you get feedback. And then from that feedback, you can make adjustments. Okay, when I did this, this is what happened. I didn't want that to happen. So what adjustments can I make so I can actually produce the results that I want? That's how I can put that into my own words. Matter of fact, it says something right here on the front of the cover I can read to you. Turning mistakes into stepping stones for success. That's a great way to put it, okay? So I'm reading that book, and I'm also reading the Maxwell Leadership Bible, and it's the NIV version. So I'm reading that and dealing with the stock market and technical analysis and reading the charts. This is the book that I'm reading right now, Japanese Candlestick Charting Techniques by Steve Neeson. Now, I've read this book before, but when it comes to really being educated and learning about stuff, it's about repetition. Reading it one time, in my opinion, is not enough. It's about repetition. Do it over and over and over and over again. Then as you learn the information, you want to apply it. And then I'll come back to, yeah, we went through the books. I'm going to skip down because it's something I want to share with you guys about why I have 3 YouTube channels and why I separated what's going on. So I want to explain to you about what's going on with that. So the YouTube algorithm is very unforgiving. They really want you to narrow down into a specific niche. So in my personal opinion, if someone wants to be successful in finance, they would need to work on themselves as part of that process because they are the ones producing those results. So just being educated on something like you know better doesn't mean you're gonna do better. I hope that made sense. So I'm gonna say that one more time. It's people that know they should eat right that don't eat right. It's people that know they should work out that don't work out. So having the information is not enough. You have to be disciplined enough and wise enough to be able to follow through on what you know better to be able to do better. That's discipline. That's discipline, then consistency, being able to get past or overcome procrastination, like you putting stuff off. But discipline is really, really key. Discipline, creating structure, sticking to it, creating a schedule, creating systems and things like that. So I have a whole separate channel called Original Greatness Uncut, where that's what I focus on that channel. Now, I haven't put some content on there in a minute, but it's new to you. So it's content over there where we focus on self-improvement, mindset, personal development, and things like that. So you can get your mind right. And then on this channel, this is where we focus on the stock market education. So you work on yourself, and then you work on becoming educated to be able to apply what you learned. That's why the channels are separate. I couldn't put them on one channel because the YouTube algorithm getting confused and it's not pushing the content. So now with this channel just being about the stock market and the other channel about self-improvement, self-education, and mindset, it's not confusing the algorithm. So that's why I did it that way, okay? And then I have another channel called Original Greatness Shorts. So what I do on that channel, I make clips out of the content we make on this channel. And then the shorts are put over there. That's another thing about the YouTube algorithm not being unforgiving. So with the YouTube algorithm being unforgiving, if I put shorts on this channel as well as long form content, YouTube might push my shorts more than it pushes the long form content. And I want to push that. So if I only put long format content on this channel, like the live streams and things like that, I know it's going to get pushed. So that's why I separated to have it in the 3 channels. And then if someone subscribes after watching a short, they want more shorts. If somebody subscribes because they watched a live stream or watched something about the stock market, that's what they want more of. They didn't subscribe because they saw self-improvement or personal development or mindset. But if they were on Original Greatness Uncut and that's what they saw, that's exactly what they're going to get, because that's the only thing that I put on that channel. Okay. So I wanted to share that with you. And these are some of the books that I'm reading. This, I already explained that. So we're good with that. Now, the live chat replay, this was the issue that was going on with that. So when you guys were tuning in and you were leaving chats, I didn't know it was some stuff going on behind the scenes on the YouTube studio where I had to have the live chat replay selected in order for it to keep those chats. So we have that fixed now, and that shouldn't be a problem moving forward. So now when you guys leave a comment or leave a chat, I pull it up on the screen, I respond to it, and then if it's something that's too long that we can't respond to during the week, then we can come back to it on the weekend. Just make sure you tune in so you can get those answers, all right? Now, it's a few other things I wanted to cover before I wrap this show up. And I want to talk about different types of markets. So one of them that I want to touch on today is talking about the crypto market. Now, this is my personal opinion, but I want to tell you a story or explain to you why I stay away from the crypto market. Now, I've participated in the crypto market. I've made some money. And I've lost some money. And I believe I lost way more money than I made in the crypto market. But this is what I had to understand, or what made me personally a better investor and a better trader, is understanding that whatever you're putting your real money into, it has to have real value. I'm going to say this again. Whatever I'm putting my real money into, it has to have real value. From my experience, the crypto market is built off of hype. There's always a story behind a cryptocurrency coin. There's a story behind it. It's hype. It is not based off something real. It's not based off something tangible. And the more someone believes the story behind that crypto coin, the more valuable that crypto coin becomes. But it's only based off of what someone believes it's worth. It's not based off of what something actually is worth. Okay. So let me use another example. I don't know if you remember or not, but around the time that crypto first blew up, there were some other things that were being sold, like NFTs. And it was this other thing that was called digital land. It did not last long, but it was a big thing. So digital land was being sold like crazy for big bucks too. Okay. So with the digital land, I think it was like called metaverse or something like that. But the idea is this: what makes real land valuable? One of the main things that makes real land valuable is that no new land is being made. There's a set amount of land. There's no extra land being made. We only have what we have. But in a digital space, land can be created. So in a market where there's no scarcity, it can just be made. Then why would someone buy that from you? Now you're competing with price. So if I bought land, digital land, for $1,000, and then someone could make digital land, it cost them nothing. I'm selling my land for $1,000, and I have a set size of this digital land. They could make their size just a little bit bigger than the size I got and charge a little bit lower. And then if somebody was going to buy it, they would buy it from them. They wouldn't buy it from me. So we'd be competing on price. It's a stupid, in my opinion, that's a stupid investment. Now, I was smart enough not to fall for that one, but I was not smart enough to stay away from cryptocurrency. I wasn't. But now that I have a better understanding about what value actually is and where it is, Now I can make better trading and investing decisions. So if a currency is based off what somebody believe it's worth, soon as someone's belief changes, then that coin's value is going to go up or it's going to go down. And I don't want the value of something I'm investing in to be dependent upon somebody's emotions purely, because that's all it's based on at all times, what somebody believes is worth. That's why I stay away from the crypto market, okay? Now, let's talk about the options market. So in the options market, there's people that I've seen on YouTube that's actually been saying that options are assets. If once I learned what options are, I immediately knew that options are not assets. So let me give you an example. If you don't know what options are, I'm gonna give you an analogy. It's like you are renting a house. If you own a option, if you own it, so you actually bought it, you've bought the rights to rent for a certain period of time. You control whoever actually owns the asset. So if somebody purchased a house and they rented that house to you, you have a lease agreement based on you renting from them. You're leasing it from them. So who actually owns the asset? The person you're leasing from. So your lease is not an asset. It's a lease to someone else's asset. So options themselves are not assets. If someone understands that concept and the terms for it in the financial space, it's a derivative. You look it up. I'm not going to be able to break all this stuff down, but the reason why I'm explaining this right now, because it does get a little technical, is that I have seen people on YouTube people that talk about stocks and options and all that, encouraging beginners to start with options. Options are way more difficult to understand than stocks. From my experience, it's a derivative. It has a lot of different things and variables that goes into the value of how the price and value of that option can fluctuate based on how the underlying. So if I'm using words you don't know, that's already over your head. You're like, oh my gosh, let me show you a book I have on options. Do you see this? Do you see how thick this book is? And just in case you want to know the name of it, it is Options as a Strategic Investment by Lawrence G. McMillan. Okay. That book is just on options. And there's people out here that's hyping beginners up to start with this. So you can buy options based on something that's a stock. So for example, if you buy a Amazon option, that option is based on what happens with Amazon's stock. So if you don't know how to trade Amazon stock and be profitable, chances are if someone isn't able to be profitable by trading Amazon stock, chances are they're not going to be profitable trading Amazon's options. There's more. Think about it like hoops, like you had to jump through hoops. Getting the ball through one hoop is easier than trying to take one shot and get that ball through 5 hoops. That's an analogy of how difficult options are. You have to get multiple things right in order for the value or profit of that option to be in your favor. You got to get time right. You got to get the strike price right. You got to get the time value right. I don't know if I said that twice, but you got to get the time value right. You have to get the strike price right. You have to get the implied volatility right. Then there's rho, there's gamma. Now, if you got Vega. So I'm mentioning all this stuff. You're like, man, what the heck is that? That's my point. Now, if it was a stock or someone's strategy could be as simple as buy low, sell high, buy low. And stocks are not on a time frame. They don't expire. It's based on if that company that's associated with that stock goes out of business or is acquired and is no longer a public company. That's the only time table that stock is going to be on. But an option is on a timetable all the time. So the other thing I've seen them push are what's called leaps. So if all of this stuff is over your head, that's an example of explaining that as an individual, someone is not educated enough on that financial instrument in order for them to be trying to trade it or invest it. So that's options. Now, this is why I chose to focus on the stock market, because the stocks are associated with a tangible, real asset. For example, if I was to invest in McDonald's, McDonald's is not based off of a story. It's not based off of hype. It's not based off somebody believing in McDonald's. If someone didn't believe in McDonald's anymore, I could still go to McDonald's, use the bathroom, order a milkshake, go through the drive-thru, buy a Big Mac, complain about the fries. It's real. It's not based off of somebody believing that McDonald's is worth something or not. It's associated, the stock price is associated with a real asset. Now, the stock price can be affected by market sentiment. I hope I'm pronouncing that right. But this basically means that someone can panic, like the market can panic, and they can, like, let's say, for example, this is just for educational purposes, for example, that McDonald's comes out with some type of bad news, like say they're going to get sued for something. Something negative comes out. Somebody got sick from eating the food, just something terrible with that news. The stock price may take a dive. It may go down because now people are panicking and they're selling that stock because they're worried that they're going to lose money or something's going to happen to their investment. So now with them doing that, now the price is based on market sentiment, how people feel about the stock price. But technically, that story did not change McDonald's value instantly. So what I mean by that is, even with that negative story, McDonald's has the same amount of restaurants. They got the same amount of employees. They got the same amount of equipment. None of that changed. All that's the same. The only thing that changed was the story. And now that this story came out that's negative, people are reacting to it and they're selling the stock. See what I mean? I hope you see what I mean. And I hope I did a good job of explaining that. But my point is, over time, that stock price should return back to the value of what McDonald's is actually worth. Once that negative news passes and plays out and people not panicking no more, they might see McDonald's stock price as a bargain and come right back in and start buying it. But it's associated with a real tangible business, a real tangible asset, something you can actually see, something you can actually spend money with and on. All right. So I hope I broke that down really good. Now, I want to talk about earnings highlights. So when it comes to the earnings highlights that we do during the live streams, Monday through Friday, there was something that I learned that I wanted to share with you guys, okay? So I didn't know that when it came to accounting, there's different ways that financial figures can be reported. Now, fundamental analysis is when someone looks at the financials of a company. So that's going to be the income statement, the balance sheet, and the cash flow statement. They're looking at the financials. Now, on that financial statement, they can report those numbers in different ways. And one of those ways is the standard way. It's the way that the SEC makes sure all companies report their financials, and that's the GAAP, and that stands for Generally accepted accounting principles. General accepted accounting principles. And I'm going to double check that right now, so I don't tell you something wrong. Let me double check to confirm, okay? Let me put that in. I just asked, what does GAAP stand for in finance? GAAP stands for Generally Accepted Accounting Principles. Generally Accepted Accounting Principles. That's what it stands for. So what this does, this forces companies to be totally transparent, to adhere to the SEC rules and regulations. The other way companies report their financials is by using an adjusted reporting practice. So I'll explain the differences. An adjusted reporting is a legal way for a company to adjust the numbers to make the company appear financially healthier by removing some of their losses and costs. All right. Notice what I said. I hope that you really grasp what I told you. This is a legal way. This is a legal way for them to basically change the numbers and make it appear that the company did better than they actually did. Okay. Now, why is this something that they allow companies to do? Or why would that be something a company would want to do? Of course, they don't want you to think the company is doing bad. But the idea is, let's say during that time frame that they're making that reporting, let's say during that quarter, they had a bill or cost that was a random or one-time thing. They don't want to scare investors into thinking that the company is not profitable because this is going to be a loss, or they're not going to be profitable for an ongoing period of time. Hey, we had this big tax bill this quarter. This isn't something we have to pay all of the time. So if we didn't have to pay this random big tax bill, this is what our EPS would have been if we hadn't had this random cost or expense. So that EPS would have been an adjusted EPS. But the true EPS would be the GAAP, the Generally Accepted Accounting Principles EPS, because that's going to include that one-time cost. Okay, but I'm gonna still read to you what I have on my screen so you can still make sure I give you this definition. A GAAP reporting is required by the SEC because it forces the company to report everything, to disclose the most accurate number possible publicly. So they usually use an adjusted EPS, not just an adjusted EPS, any type of adjusted financial figure. They usually use those in press releases and investor presentations. They can use an adjusted figure, but in the 10Q or the 10K, they must disclose the GAAP figures. And it might be on the 8K as well. Let me double check that. GAAP have to be disclosed on the 8K as well as the 10Q and 10K. Let's see what it says. No questions. Okay, it says no. An 8K does not inherently require a GAAP disclosure because its regulatory purpose is completely different from a 10Q or a 10K. Okay, so that's different. So on the 10Q and on the 10K, that's where someone would find the GAAP accounting practices, principles, accounting principles reported. That's where they would find that, on the 10K and the 10Q. Not in press releases. In press releases and investor presentations, they might use the adjusted, and so that's something else I wanted to share with you guys. So let me pull this up on the charts, and I'm gonna get ready to wrap this up and let you guys go. There's nobody even asking no questions or even tuned in about it. So I'm just gonna make sure that I'm here. So when people do feel comfortable or whenever they're ready to ask questions, I'll be here. But let me make sure that I show you this before we wrap up. So pro market closed. Here we go. Now I want to pull up a company. Let's do McDonald's again since we were using them as an example. And then we'll go ahead and go to the, got it. All right, so let me pull up McDonald's on the chart. No. Let's pull up Dell because I already have a ticker for them. DELL. Let's pull up Dell. So we'll put a ticker up for Dell. There we go. Pull up the charts. Here we go. All right, put Dell back on the screen. All right, so we're looking at Dell, and this is what I want to show you. These are the EPS numbers on the ThinkorSwim platform. So when we mouse over this down here at the bottom, it says earnings estimate, but this number right here, this $4.86. This is the adjusted EPS. This is not the GAAP. This is adjusted. I'm gonna move this over. See this 389? This 389 EPS on Dell, that is adjusted. That is not the GAAP. All right. Now, I'm going to prove this to you. And hopefully I don't put my foot in my mouth by proving it. But I remember doing my research. So let me go ahead and pull this up. So I'm going to pull up the SEC website. Yeah, you can see it. So we got the SEC website. Wait a minute. Did I? Oh, gosh. Yeah. All right. So SEC website. Let's go there. So here we go. We got the SEC website pulled up right here. So when we go to the SEC website, we're going to go right here to where it says search filings, full text speech, more search options. Change this to the last 30 days and type in Dell. I'm going to blow this up. It's loading, guys. Give it a minute to load up. So we're going to blow that up. That's the 8K. Now, why I say it's not. Now, I know that's where I look. So that's when they reported the earnings. Did not say that. Let's look. Open. Release, storage, release, da-da-da. All right. There we go. Now, sometimes AI can be wrong, okay? So we just seen it said that the accounting practices on here was different and something like that. But it does show the non-GAAP. You see it right here. So non-GAAP earnings per share, EPS. You see that number right there? $4.86. That's non-GAAP, so that's adjusted. So we need to find that 486 on the ThinkorSwim charts. There it is, 486. So they're using the adjusted. That's not the GAAP earnings that they have on this platform. Just showed it to you. So there's a difference. So if somebody just says this was the EPS for this company, the next question is that GAAP or is that adjusted? Because it makes a difference. All right. So I wanted to make sure I did that housekeeping because we've been talking about that in the earnings highlights, but I never really broke down the difference. So that's that. So let's get ready to wrap this up and call it a night. We got this stream done. So, hey, that's all I can really ask for. So let's just go ahead and go here and wrap this up and I can get my weekend. Get to my relaxing a little bit, all right? So you already know. I hope that you learned something and I hope that you earned something. Thank you guys for joining me tonight. I've done 2 interviews with up-and-coming content creator Tiara Owens, sharing how I got started investing in the stock market, my profits and losses, and a link to that playlist of interviews are down in the description. And make sure you tune in weekdays following a market trading session at 11 p.m. Eastern Time. Take care and God bless.